Welcome to Wealth Conversations with Biztech. Now, today we explore the topic of investing during uncertain times. And here to give us insights is Danny Wong, founder of Areca Capital. Danny, welcome to the show.
Hi, Brian. Thanks for having me here. I'm glad, and I think I met you a year plus ago. Now we meet again. Let's talk about this topic. I'm very exciting now.
Yes, because it's very, very relevant now, and we thought that this would be a good way for really our audience to see what are the steps that they need to take in order to thrive during this period, and not just to survive, but also to thrive because there are opportunities during this time. But let's start, Danny, by you giving us an overview of what Areca does and your background and the history of Areca.
Yeah, we established in 2006, 2007, so it's about 14 years. Areca Capital is actually a private wealth management company that we focus on fund management and wealth advisory. Right? We are licensed by SC as the Security Commissions of Malaysia, and we are also under the Federation of Investment Managers of Malaysia, FIMM, which allow us to do fund management, financial advisory, financial planning, as well as distribution, the products distributions. So our service more emphasized on broad wealth management spectrum, from wealth protection to fund management to investment planning to distributions. So these are what we're trying to do. So our ambition is actually we want to be the partner in our clients' wealth management journey. So maybe it can be over the generations. So now we see quite a fair bit of people actually generating wealth, but they did not really effectively put their wealth into the right place. So this is what we're trying to do.
And that's something that we want to zoom in on, because I think a little bit later in the show, Danny, because a lot of people tend, especially in Asia, we tend to be sort of overweight on the properties in terms of our investments. But let me ask you this, what is your investment philosophy and approach overall?
I always believe in such that typically on any asset class, the short-term sentiment is actually affected by liquidity and risk appetite, right? But over a longer time or a longer period, the intrinsic value or the real value, the fair value should actually take place or prevail the two short-term sentiments. So the interplay of this is very important. Say you are buying a share or you're buying a piece of land, right? You will not rush in to buy because your neighbor say there is a good value, and then market a lot of bidders for the land. Then you go and rush to it, and that creating the short-term, hype on this demand and supply, right? But ultimately, you have to think about it. What is this land worth or this share worth eventually? Because that will settle at one point. So the interplay of this factor, the liquidity, the risk appetite, and also the intrinsic value is very important. And we think that this will drive the short-term and long-term prices of whatever assets that you have. Okay. So that we believe in that.
So in terms of your investment philosophy, how has that impacted the track records of the funds? Could you just give us an overview of, because again, you're 14 years, you've been around long enough. The proof is in the pudding for a fund manager. What's your track record?
There are different portfolio, different objectives. One of our flagship fund, which is a long-term equity fund, right? We have garnered about 523% over the 14 years. So compounding is about 14% per annum over the past 14 years.
Okay, that's
good. So your 100 ringgit with us, it can become 623 today, right? So because of our philosophy, we believe that once you set your asset allocation, then you understand the interplay of all those factors, you'll be able to achieve a long-term growth over that. Of course, it's a long-term objective. So because of this 500%, we won the Definitive Ripple Award for 3 years, 5 years, 10 years duration under the Malaysia equity categories for the past 4 consecutive years. So we are the best fund over these 3 years, 5 years, and 10 years for 4 years consecutive.
Okay, congratulations.
Thank you.
Give us a perspective of your client base.
We started with our a few clients that is actually they are high net worth. They are 100 million, for example, wealth.
Okay.
And then we just concentrate our focus to this niche market. So they are ranging from individuals to SME, to family, to private trust, to foundation. And nowadays it's actually going to non-profit organizations like churches. We focus on this niche market, meaning that consists of slightly above mass affluence to high net worth. So this is our focus because we want to remain our service standard to be at least there, right? We need the quality than the quantity. So we focus on few hundred really, really good high net worth and another maybe 1,000 of this, slightly below the high net worth. There's about 1,000 plus of them. On average, a person about 1 million to 2 million, our clients. So we are managing about 2 billion so that you can see the clientele of this. But we don't have the big GLCs or institutions. We don't have. We have a lot on those individual and family wealth, as well as some, because of their wealth, they may be listed companies owners or they are the SME owners.
Okay, Danny, it's very interesting, your client profile and what you've done. How have you seen changes in terms of the wealth in Malaysia over the last 14 years? Because how people have made money has changed.
Good questions, in fact. I've been in this industry for 30 years. Over the 30 years, we have seen, 20, 30 years ago, we have our clients, and today is still with us. My so-called my friends and followers, they're still with us. And they used to be about 50. Today, they could be 70, 80 already. Okay. And then the next generation, we also get to know their generations, right? The next generation. And we see the change dramatically. Those days, a lot of people, because they make a lot of money from the beginning of the economy boom, 1970s, 1980s. Yes. They make money quite fair beyond that. And the kind of model is very different from today, that the wealth has passed on to the next generation, and the next generation could be around 30, 40 in their age. And they venture into a different thing because they inherited with the wealth, and they have the so-called the startup capital to do something different from the fathers or the mothers. Right. So today the wealth management is very different, but this group of investors are very busy and very aggressive. They venture into something that is not known or not been experienced 10 years ago or 20 years ago. It may not be existed then. Today is something different. Biztech, for example, is something different from what I have seen. Right. Yes. So you cannot find this kind of business 10 years ago or 20 years ago. Right. Today is very different. The wealth creation is very different today.
And so, Danny, are you seeing that traditionally, if you look at ultra high net worth or high net worth individuals, basically they are concerned about wealth preservation? Is that the same sort of philosophy that their children and maybe their grandchildren are thinking about, or they are less cautious about wealth preservation?
Well, you posed on a very important question or issue here. The elder generation that I always deal with, they are elderly and they are in the 80s or 70s. They are very, very concerned about wealth preservation. But the younger generation is different. They say, I have this wealth, but wealth is not what I want, it's just the numbers. What I want is my achievement, my career path, and my satisfaction. And how can I multiplying this wealth into even bigger wealth or doing something for the good sake of the environment or the people? So these are the new generation that don't use to own properties, for example, spend a lot of money to buy lands and this. But these are the group of new wealth generation that focuses on something different. They want to achieve something that is very different for someone into an area where ESG is concerned, or in something technology space, or in something that is people never thought of 20 years ago. So it's very different.
Now, so this is interesting, and let's zoom in on that. In these uncertain times, if I'm second generation wealth or third generation wealth, for example, as you said, the profile is, and that is a Biztech profile. There are a lot of, we have a lot of technology entrepreneurs as our profile. We have a lot of business owners who may have been self-made, and our technology people are basic, our audience is self-made millionaires and high net worth individuals. Some money is inherited as well. In this kind of uncertain times with the pandemic, what should we be looking at in order to do a couple of things? What you mentioned is, of course, ESG is very important. ESG now is top of mind for this generation of wealth creators. But we have no time. So what is a general investing strategy during this time that you would recommend from a short term as well as long term?
All right. And many people will have this mindset that during crisis, I got to be very, very careful and whatnot. You know, it's important is actually to survive over this crisis.
Yes.
While the new generation or the new thinking, some of those I would agree or don't agree, that some of them see the opportunity in crisis, and including myself, right? Okay. How can we change our mindset from very pessimistic situation to make, or rather to really create opportunities, or perhaps opportunity during this time? So the investment strategy is different. When I quite like the one what Warren Buffett is saying, when people are fearful, you should go out and become greedy.
Okay.
So that is what we believe. And investing in short term is different from long term, of course. Your short term, you can be, you know, doing something very drastic, but you know this is only one off, and you take on short term. Or it could be something that you think that this is a short term game. I just want to preserve this period at time, so you cannot risk your money into a very volatile market. So it depends your view on this on the opportunity that come to you, right? On longer term is different. Your longer term is actually asset allocation will play well, because you have to know how to, if it's really something that's against us, we still can survive all this. Once you have the asset allocation, you're not worried about crisis, because you already planned for. You know that this crisis, I still can survive. I don't care about my growth assets. I leave it there. In fact, I should top up more in that growth assets, because I will survive. Only those who are not prepared, they will worry about crisis, because they are not prepared. Their asset allocation is not there. Then the cash flow will be suffered, for example, and then they have to sell the asset at the wrong time, and at the end of the day, they don't have anything left. So this is very important to have the well planned asset allocations. Is very important for individual and high net worth.
And so here's the thing, Danny. So and asset allocation is a very good point, because again, it is linked back to what you just said, which is some people want to take advantage of opportunities. But let's just say you have a bulk, 100% of you've got 100% portfolio, obviously, which includes your business wealth as well as your personal wealth. And then you shouldn't, obviously, from a wealth management strategy long term, gamble on that 100%. What do you normally see successful younger entrepreneurs who perhaps have inherited money and also have made their money? How much are they now, because there are a lot of opportunities out there?
Yep.
How much of their portfolio should they perhaps be aggressive with?
In fact, if a young generation, I just usually, of course, it depends on individual, but on average, in general, I would advise them to keep maybe 2 years of cash,
okay,
or equivalent, that can last you for 2 years in case of emergency.
Okay.
So once you have that, the rest you can allocate it into growth assets or aggressive assets, because you are young.
Okay.
If you are 30, you are 40, you cannot assume I live until 50. Nowadays, people live until 80, 20, or 100 even, right? Correct. So you have to You have to achieve what you want to do now. And for you to enjoy later at 60, that you can see the world and travel to see, let's say, the Northern Light, for example. But now is the time for you to do it. You must do it in the aggressive way according to what you believe. But having said that, your cash must be there. Your liquidity must be there. But some of them think that liquidity, is it put money in the bank? It is not. Buying a share is also liquid because you can sell it within 3 days.
Yes.
Buying some dividend share, it could be also part and parcel of your liquidity, right? Because that is defensive enough. When crisis come, you will still can get back some money and you still can last you for some time. Well, will not disturb your long-term aggressive assets portfolio.
And also one of the things, Danny, which people, today a lot of younger people are using trading apps and investing. So
yes.
But what they don't realize is close to home, and you hit the nail on the head just now. Actually, in fact, I've talked to a number of fund managers outside of Malaysia. Bursa Malaysia offers a lot of very good dividend stocks.
You're right.
And the thing is, Bursa Malaysia has underperformed sectorally as well as a burst as a whole, because of the political negativity surrounding Malaysia.
Correct.
So can I ask you, Danny, then, during these times of uncertainty, what are the sectors that we should be looking at in terms of investing in order to then take advantage of opportunities?
Firstly, I must share what I believe.
Okay.
Only when you agree what I believe, then you can follow what I'm going to do.
Okay.
I believe that current situation is really a good opportunity because the market is affected by two main factors. So globally, of course, the pandemic, right? But we all know that pandemic comes and go.
Yes.
You cannot stay long. If you stay long, it becomes endemic. We have to live with it like AIDS, like dengue. We have to live with it. Yes. If it's like flu, whatsoever, it will go one day. So that is just short term, maybe 1 year and 2 years. The second impact for Malaysia uniquely is political uncertainty. But this issue the overhang of this issue is removed after the change of PM now.
Yes. So
when a new prime minister come on board, people usually will give chance or want to see his performance over 1 year. So in short, I don't see the next 1 year going to be a uncertainty again. So this overhang has gone. And the pandemic, you see the vaccination is also at very good rates now, almost like 70 or 80% of the adult in important area are all vaccinated. Now with these two major factors that caused the meltdown of the share market, it's already removed. And what are you waiting for? So with that belief, I will go into this next thing. What do we see? There's a lot of dividend stocks there. But this dividend stock may bash down because of people panic and because of herd mentality. When market down, I will sell, people sell, I will also sell, right? So that caused the share price to come down. And this kind of share dividend stocks is very liquid and is high yield. Some of them can 6-7% and with a large asset base.
Correct.
They will not go down.
This is exactly what you're echoing. Is strangely enough what we have in Biztech a market show every day at lunchtime at 1 p.m. This is exactly what and all the analysts are outside of Malaysia. This is exactly what they've been saying. Bursa Malaysia is actually tremendously undervalued because you can get 6 to 7%. I mean, what can give you? That's dividend. You're not even talking about capital growth.
Yes.
And the interesting thing about these companies is they also are backed with earnings. Forward earnings also are quite visible.
And they have a huge base of the NTA, the net tangible assets there.
So Danny, what are sort of the stocks and in your funds that you are deploying dry powder to work at the moment?
Okay, at this moment, we are almost fully invested. In fact, we just increased to 95% yesterday, right? That's a limit, almost like 100% invested. Rarely we can have this. What we believe is actually the recovery will be there, and we think that we engage the two different approach. We call it barbell. Right? On one hand, we like those value at reopening because economy will come back. Those
And
are
this is the
financials.
hospitality related type stocks.
No, not yet. It's more like the banks and financial. With a proxy to economy, the consumer type, where people, the pent up spending.
Yeah.
For 1.5 years, I have not spent money. So now I can go out, I will spend money. So those are the sectors that we like. So this is a recovery or value that maybe consists some of the dividend stocks because these are undervalued. That what we have discussed, maybe is banks, for example. On the other hand, we also have this growth sector where we believe in 5G, with EVs, the electrical vehicles. We believe Internet of Things. These are things will be the mega trend over the next 5 or 10 years. And these are the semicons, the E&E sectors. So we have these two, the barbell approach. When recover, this one will bounce back a lot. Right. This one is continuing to be growth. We will stay there for 5, 10 years. And this growth is tremendous. They're talking about a margin of 30%, 40%, year on year. Of course,
these are many of these companies, these E&E companies are all Penang based and they are within the supply chain of all these global giants.
Exactly. And currently, the global shortage of these chips and those things. And you will drive this business to the next level. Is not talking about 10% growth, 20% growth. It's the quantum leap. They may continue innovate into new products. And the kind of contract come into it, for example, Tesla give contract, Huawei give contract, they give contract to Malaysia, a small piece of percentage to Tesla to Malaysia is a big percentage to this listed core. Yeah. And you're not talking about 10% growth, 10% growth. It could be 100 and 200% growth in terms of value and contract, So you can see the growth side. So for younger people, they also venture into technology, for example. It could be hardware, it can be also software, it can be also in between. And these are the growth area that we believe.
Now, Danny, it's been a fascinating conversation. Any final thoughts you would like to leave us with before we end this conversation?
I would think that market is always here, and off and on there will be a crisis. At any time, you must have your dry powder. You must have your cash or equivalent become your reservoir. Your reservoir is there. Only you need it when a dry period, you have the water.
Right.
So this period is the time for you that you have keep the cash to deploy it into the right assets. I've seen wealthy people that keep cash a lot in the normal days, which is okay because they say, oh, this is my dry power. But in the crisis time, they even raise more cash. And after that, market rebound, everything goes back to what is normal. Then they say, oh, I missed this. No.
Yeah.
When you have your dry powder ready, when the right time comes, you must really deploy it and capitalize on the opportunity and make it grow further. And that cycle always comes in nature year on years. So you have the cash in the so-called euphoria period and very, people, even uncle, auntie buying share. Maybe that's a time for you to be more fearful. You sell, you create cash.
Right.
When the cash, you keep it until maybe crisis time. Everybody is give up. You should feel sanguine about that already. You should deploy the cash into it because you already well prepared. You're not worried. So yes. I think the new wealth people should, they think it way. Actually, it should be even more aggressive in doing that. That's what I thought.
Danny, thank you very much for your insights. It's been a fascinating conversation.
Thank you very much for having me here, Brian.
Now, I'm Brian Fernandez, and I've been speaking to Danny Wong, the founder of Areca Capital, on Biztech's Wealth Conversation Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks a lot for tuning in.